With a steady performance and quick revival, the real estate sector regained the buyers' and investors' trust and further picked up growth momentum. After 3 waves of COVID-19, there has been a historic rebound across the realty sector in India. To talk more about this and to draw an analogy with millennial sentiment of housing, BTTV's principal correspondent Karishma Asoodani spoke to leading voices of the real estate sector on what's the future of Indian realty in a post-pandemic world.
I'm Karishma Asoodani, and with me today is a stellar panel of guests. I'm joined by Mr. Anuj Puri, Chairman, Anurag Property Consultants, Mr. Gulam Zia, Executive Director, Knight Frank, and I have Mr. Dhruv Agarwal, who's Group CEO, Prop Tiger Housing and Makanwala.com. That's a lot of designations to hold. Thank you, gentlemen, for joining. Today's session on brainstorming the real estate sector in India is going to take a wider stance and discuss how the sector has been a key contributor towards Indian economy and building value in the tough dynamic. So I'm going to start with you, Mr. Puri. 3 waves of COVID-19 and yet 2021 saw a historic rebound with the housing sales. Are we expecting this momentum to be the same in 2022 also?
So we're hoping so, Karishma, that the momentum will continue. I must say that it was a pleasant surprise. As soon as the lockdowns lifted after the first wave, the bounce back on the demand for residential was pretty, impressive. And at that time, we thought it may have been a pent-up demand, but then it continued towards the end of 2020, beginning of 2021, until we had the second wave. And similarly, Karishma, once the markets opened after the second wave, the bounce back was pretty decent. We've now had the Omicron, and we are hoping that the bounce back, does come back similar to what we saw in the first and the second wave. Maybe fundamentally, there are a few things that are working for the residential sector. And Karishma, it is not only in India, by the way. It is across the board. So, whether you take the US, I was reading this morning, whether it is Singapore, the property prices on the residential are hitting record high. And most of the expensive properties are being bought by the millennials, by the youngsters. Which is also very interesting. And, whether it's UK, Amsterdam, Australia, India. So across the board, it's a global phenomena that we are seeing residential demand go up, whether it is social security, whether it is work from home, whether it's people wanting larger, better places, whether it's the home loan rates, or whether it's just that the millennials, who were staying in rent were treated very differently by the societies in comparison to if you were owning an apartment in that society. So, more tougher rules if you were a tenant versus if you were the apartment owner. So I think it's a combination of a number of things that has led to such a strong, growth back. We're hoping, to answer your question, that 2022 calendar year remains as solid as what we have seen after the opening up of the markets from the first wave.
You're right. I'm going to pick up that key point on the millennials part you spoke about, and I'm going to get Dhruv in this conversation. Dhruv, I belong to this millennial thought of mind between 25 to 30 years that, we shell our 50% of salaries on rent, and it's for houses that are bigger in size, because you see the millennial thought mentality can't really make it up to settle for small crammed places. So when we think of buying a house, we have a very urban aspect sentiment related to it. So is this the new conventional that you are also seeing versus the 4 people family norm that existed back then?
It's very interesting. Karishma, what Anuj just mentioned as well, that I think things have significantly changed, post-COVID. I would say that, prior to COVID, I would say the younger millennials, because millennials also, like anybody born after 1980, so, they're still fairly old, like 42. But I would say that the younger millennials and Gen Z, frankly, I used to get worried prior to COVID that there's probably a trend, growing trend of people actually wanting to live in shared spaces. The whole co-living sector was booming and really threatening home ownership, not sort of in the immediate future, but if you look at it from a secular trend, 10-year viewpoint, it was actually a worrying trend. And this generation essentially, believes in experiences. They don't believe in spending a lot of money in a single asset and locking themselves down, because not only does that, take a lot of money and put it in one spot, it also somewhat encumbers you to the place where you bought your home. So for them, it was all about, use all the money I earned in getting experiences, the kind of experiences maybe we never had growing up or couldn't dream of, while growing up at that age. Today, of course, is different. So I think that was a trend which I was seeing increasingly, prior to COVID. But I think COVID changed everything. I think, people realized, that they were facing challenges in some of the co-living spaces they were living in. They were facing challenges in the rental homes they were living in. And they realized that the only safe haven for them really, was their own home, right? At the end of the day, many people went back to their parents' homes, their hometowns, for that safety and security, which became paramount, during COVID. I think that particular shift in mindset or how you relate to a home, I think has changed for everyone. And millennials who were sort of going more towards the, sort of sharing aspect of living, and even Gen Z, I think now they are all recalibrating their thought and saying maybe it's not a bad idea after all, to own a home.
Well, you're right. Actually, I'd like to add to that, it's kind of supercharging the housing market. And maybe, Mr. Ghulam Zia, you can contribute to this, that, how it's that generation which earlier, like Dhruv also mentioned, which didn't want to buy a house earlier, but now is eventually interested in the post-pandemic housing purchase. Is that a trend that you are seeing across cities? And if yes, which kind of cities probably are seeing this spike?
I would slightly try to broad base it, not just focusing on a specific generation of Gen Zs and millennials, because it's a bit too soon for us to convincingly give the credit of this bounce back only to that segment of market, because the growth in market is such wide base. It is so broad based a bounce back that giving credit to just one or two segments may not, at least now, be good enough. So I would say, when we are talking about this bounce back, we have to also think about almost about 7-8 years of real estate depression that the industry had gone through, housing market I'm talking about. And that was the time when, incidentally, Indian economy was bouncing. It was actually doing much, much better. You talk about any sector, job growth, economic growth, etc., was all going well. It was only the housing sale which was just not picking up in spite of various government interventions, SOPs and this and that and so on. So what has really changed today when we're talking about the bounce back in market, we have to also understand that those 7-8 years of pent-up demand also has to be thought about. Typically we were looking at about at least 3 to 4 lakh housing sales in the top 7-8 cities of fresh sales. Of course, I'm not talking about second sales. So those were the numbers when the housing market started sliding down. So from there, it came down to just about lakh and a half or two. So I have to look at that number. Where are those guys who found new jobs in that 5-6 years prior to pandemic? Where are those guys who are they into rental housing or co-living or whatever? And as both the gentlemen Dhruv and Anuj spoke about, that pandemic brought in some sense of owning an apartment, but these are the same people who had money, who had parked their funds somewhere, waiting in the wings for the markets to look good. And if you just talk about last 1 year, a couple of quarters of a bounce back, I would want to believe that 5-6 years of a depression that we're going through is still to be catered to. So if your question to start with was, is this really something where we would see the party going on? I want to believe yes. Their numbers are so strong. All those guys who found jobs, I'm sure I'm not discounting those who may have lost jobs during pandemic, etc. But even that bounce back, the job numbers are today looking so good. So with all that falling in place, I would want to call it a broad-based bounce back, not just to a certain segment of market or a region. Your next question was, is it a particular region where the housing sales are going on? Well, we are looking at numbers not just in top 8 cities, but even tier 2 and tier 3 cities. As we're talking about, the youngsters who are in tech sector are actually back to their places where they belong. And that is where they're buying their houses. So this is actually very, very democratic, I would say. While Anuj was talking about global, I would keep my focus on India alone and say that this is not something restricted to a Mumbai, South Mumbai, or a high end in Delhi or something like that. It's actually broad-based, it's all over. And I would want to conclude that it is here to stay.
Right. Now, that is something we are talking about the residential side of it. Mr. Zia, if you could also comment, while we were talking about the rebound perspective, have you also seen that on the commercial side of the business?
Well, commercial side is slightly complicated. It is not so simple like housing. And here it is, while most of, earlier we spoke about youngsters going back to their the towns, etc., where they come from and so on. So especially in tech sector, and let's not forget that tech sector actually contributes at least 50% of the office market, if not more, even today. So in this, there is a worry. So the cities where it is essentially driven by tech sector, talk about Bengaluru, Chennai, Hyderabad, in these markets, the trend is slightly different. But in the others like Mumbai and Delhi and many of the other markets where the share of non-tech office occupiers is large enough, the people coming back to office is actually the way we would have seen pre-COVID numbers. So I would say that it's not very simple to say that in next 2 quarters, we shall see office sector getting back to the numbers that we were looking at pre-COVID, but it's bouncing back. People are requiring jobs. And let's not forget that especially the tech sector has recruited record number of people in last year and a half. So whenever the back to work shall happen, they will require large number of office spaces. So I'm very hopeful that as times turn, as pandemic is behind us, even the office sector shall rewrite the history, but we'll have to wait for it. Maybe a couple of more quarters. Let's be patient. It's about to bounce back.
Got it. While we get back to that, Anuj, you could comment a bit on the recent good news that came for the sector. I mean, it's definitely a temporary breather with the RBI monetary policy that kept the low interest rate regime going on. You know, they've taken this accommodative stance, and that's been there since the pandemic. If I'm right, it's in October 2020 that they are careful of the economic growth and what the consumers want. But Anuj, do you think that this, of course, could be influenced by certain other global factors going ahead?
So Karishma, as you rightly said, it is good news that the interest rates haven't yet started to climb. At some stage they will, because we're seeing that at a global level, and absolutely correct that the way RBI governor looked at the Indian economy, there has been a bit more time given before the interest rates will start to rise. It does really help. Low home loan rates does really help on both accounts. One, financial, and second is sentimental. So whilst the interest rates start to move up, you know, the financial will get impacted. What gets more impacted is the sentiment, that it starts to really take a negative outlook. But in this case, Karishma, I do feel is that the ability to absorb higher interest rates from where they are today, I mean, it's the lowest ever that we have seen the home loan rates. For the home buyer is there because, as Gulam said earlier, last 5-6 years, you know, the sector has been languishing before COVID. So the property prices haven't really gone up, but the salaries, the bonus, the commission, the payouts have continued to go up. Even if you take, Karishma, 5-6% growth in the salary year on year, the residential prices did not move forward. When you take the combination of ability to buy, you know, the ability to buy has gone up by 25-30% because the salary has gone up, yet the real estate prices haven't gone up during that period of time, and hence the affordability has become that much more easier for the buyer.
Sorry to intervene, but are you telling me that the housing prices have not increased?
That's right. Largely, they have been pretty stagnant. in that. So there are two things that are going to happen, Karishma. At some stage, the interest rates will start to go up. And that's a global phenomenon. We'll see that hopefully in India as well at some stage. But more importantly, what you will see immediately is because of the input prices going up, the construction prices going up, your residential prices will start to go up because the developers will only be able to take that much out of their profit. The rest they will have to pass to the consumer. I think the party will still continue as long as the greed does not set in of the developers, because the ability of the home buyer to pay a little more, because in the last 5-6 years their salary has gone up but the residential prices hasn't gone up, their now ability to pay a little higher on the residential price will very much be there. So I am not as unnerved. Yes, there will definitely be an impact on the sentiment if the interest rates go up. There will also be an impact because of the input cost, steel, cement, labor going up. The cost of residential will go up. It will impact somewhat, but not hugely, because over the last 5-6 years, the buyer his income or her income has gone up much more than what the property prices have gone up.
Right. So there could be a prospective increase because of the increase in other supplementary aspects. Picking that up and talking a bit about the sentiment, let me bring in Dhruv on this. Like Anuj also mentioned that, the sentiment could change a lot of factors. So tell me, from the industry point of view, from the industry sentiment, what has been the good and the bad from budget that you've picked up? I know that you're not happy, definitely, with no kind of tax rationalization on the real estate part. Is that true?
Look, from a budgetary standpoint, as you rightly observed, I mean, there was very little which was specifically directed at the sector. But having said that, I think the overall budget, was good for the economy. And I think the spend which has also been, allocated towards infrastructure spend, I think is, does, tend to have a multiplier effect. And as more and more infrastructure develops in places, it always gives a fillip to the real estate sector. So I think that clearly from that standpoint, I think the budget overall at an economic level is very supportive of the sector in general. And real estate is always tends to be, close to 7-8%, of the overall GDP. So anything which gives a boost to that, I think, has a benefit on the real estate sector. But having said that, I think the point which, Anuj made is critical. And, that's what's really been, driving, I think, this bounce back in demand, over the last 1 year. Every time the COVID sort of wave comes down, you see sort of a big uptick in demand. I think one is really the first thing we all spoke about, which is, a complete perception shift in people towards, wanting to own a home. And that's been hugely facilitated, by historically high affordability, because, as Anuj said, interest rates are at historic lows. Prices, our data show that over the last 6 years, prices have gone up by about, 2% CAGR in most of the top cities, which essentially means that in real terms, real estate prices have actually come down because they've been lower than, what inflation has been over the last, 5 or 6 years. And then, of course, with wage inflation, that's really, helped stuff. I think, the point, Ghulam also made, that there's been this pent up demand over the last 5 or 6 years. I think that's very, very important. I think, if we just sort of dial back 6 years ago or 7 years ago, people were fairly disillusioned with this sector, right? There was a lot of mistrust amongst home buyers because there were many developers out there who had promised to deliver stuff, either did not deliver at all, or did not deliver in time, or did not deliver according to, the quality promised. I'm not talking about all developers, but there were quite a few people who kind of, gave a bad name to the sector, and which also basically broke the trust and confidence of the consumer. So I think, the advent of RERA, I think, which happened now, I think, 5 years ago, I think has brought that, confidence slowly back into the sector. And I think that's playing a big role as well. So clearly, from my standpoint, as I look forward, budget is sort of one aspect. but the overall tailwinds that I see for the sector in terms of affordability, consumer sentiment, change in perception towards home ownership, and even certain government policies at the state level. I think when we saw the stamp duty cuts in Mumbai, as well as in Karnataka, we also saw one recently in Calcutta. I think all of that, has been helping as well. So I think structurally, if you ask me, as well as cyclically, I think we are on the cusp of an upturn, for residential real estate. And I think there was nothing in the budget which sort of, undermined that. If anything, the overall sort of fillip to the economy, will further accentuate that upcycle.
Very key important point that Dhruv, you and Anuj have spoken about on the pent-up demand. And Ghulam, I'd like you to give some data on this, because I remember reading a Knight Frank report during Diwali in 2021, where it spoke about the crazy demand uptick sales that were seen, especially in Mumbai and Kolkata. Now, what is the on-ground situation? Any data to support that? I know I was reading also a report that said Kerala is in a bad shape currently. Is that true?
Well, starting with Mumbai, Karishma, the numbers have cooled down a bit, but these numbers, we are still looking at a monthly registration data of Mumbai municipality alone. Mumbai comprises of at least 5-6 other municipalities, the MMR region. The Mumbai municipality alone is still registering 7,000 to 8,000 apartments sold in a month, which is a great number. And these kind of numbers we haven't seen in last 10 years. The Jan-Feb numbers to 8,000-9,000 apartments sold is outstanding. And as I said, I'm still talking about only Mumbai municipality MCGM numbers. When you look at the whole MMR, the numbers are much, much larger and bigger. Kolkata, however, did see a bad January. And that January numbers are worrisome, but we would want to believe that there are always ups and downs. And of course, the markets, because it was a huge uptick that we saw in Kolkata between September, October, November, essentially. December was also not that hot, but those 3-4 months did see a huge number of transactions. And those numbers have started cooling down. However, these numbers are still better than pre-COVID numbers, what I would want to tell you. And that is what is and we're talking about extremely stellar performances from Mumbai, etc. But even Pune is doing a good number. Bangalore is doing a good number. So net transactions, and these transactions, mind you, the number I'm talking about are the registration numbers, which include everything: first sale, second sales, etc. Not just the developer level sale. And the developer level sales have actually shot up a lot more. Because a lot of these completed apartments inventories which are lying in many of these cities really did see a lot of takers coming up and picking up, because even the numbers, the prices were in such category were pretty affordable. And the new launches, let's look at the new launches all across in the top metro cities, has been outstanding. So all these numbers are giving us confidence that the sales shall continue. And as earlier, all three of us spoke about the pent-up demand, these numbers are actually full of confidence, are actually a proof that the numbers are here to stay. A Mumbai number of about 8,000 transactions a month is something which we didn't see even when the stamp duty cuts had started at 3%. It's only when December of last year when we saw huge numbers, but that apart, 9,000 apartments sold without any stamp duty cut was unthinkable, even pre-COVID numbers. So if you're talking about sheer data, here it is. The data is also extremely positive. And wherever we do see a bit of a cool down in numbers, those numbers, if you want to take some breather, are still better than the pre-COVID numbers. So net data is telling you what's happening out there.
One, of course, is, what you see on the sales side, as Ghulam pointed out, one of the things I wanted to highlight was, if we look at traffic on digital portals, right? Digital real estate portals, like the ones we have, and of course, there are many out there as well. But if I look at the overall share of the market of the top 4 players, right? Between February of 2020, just prior to COVID, and today, the traffic as per SimilarWeb, which is a neutral source, which gives sort of the traffic information, that has on how many visits each of the sites have experienced, that has doubled between February of 2020 and February of 2022. So that it can be attributed to two factors. One, of course, is the increased digital adoption, which was forced by COVID across the board. So many people who were previously not searching for homes digitally have also come online. That could be one aspect. But the fact is that you're seeing that pent-up demand now show up, in audience numbers on our platform. And it's not just being driven by rent. In fact, if we see anything, it's the buy traffic, which is outstripping the rent traffic, on these platforms. But that clearly is a lead indicator of what's in store even ahead. So it's not just conjecture and hope. I think there is a real cyclical upturn. And month on month, as we keep looking at our audience numbers or traffic numbers, they are on the upswing. So clearly that pent-up demand is being backed by actual sales data. And I mean the conjecture of pent-up demand by actual sales data and search data as well.
And just to complete my part, that whatever numbers, and since Dhruv was talking about rental, I was only focusing on sales number. These transactions were just sales transaction. I'm not even talking about rental numbers in these, Karishma.
Okay. So on that, what would you rate the good and worse on a table from 1 to 10? What could be at 1 and what could be at 10 from a geographical point of view?
So look, rather than sort of, listing 1 to 10, in terms of specific cities, I wanted to share one trend with you. While we've seen audience numbers go up significantly in the tier 1 cities, where we've been surprised is the growth in audience, in tier 2 and tier 3 cities. I think, Ghulam was alluding to that earlier, talking about how, the demand is broad-based, not driven by, one single geography within the country or a specific segment of buyer, but it's broad-based. So that is visible even in our search data, where we've seen actually traffic from tier 2 and tier 3 cities actually outstrip the growth in traffic in, tier 1 cities. So that clearly, I think again points to two things. One is the fact that all these tech workers who sort of gone back, their hometowns are buying there and are searching for, buying homes, digitally. And the second thing is, of course, overall, increase in digital adoption for, searching for real estate. But I would say tier 2 really has been the star or the surprise factor for us, in our search data.
Right. Before I go to Anuj, Dhruv, I have a quick follow-up question for you. While you were talking about the traffic part, I wanted to know, are you also seeing some kind of traffic and interest towards the luxury market?
So, I don't have the immediate data, with me on sales.
On an average.
But look, my perception, about real estate in India generally is demand seems to be fairly, inelastic at the luxury price points. COVID, despite all the hardships which it has caused, to people globally, I think the wealth of the rich people across the globe, or the 1%ers as they call them, has only gone up. You've seen what's happened to the stock markets, in the last 2 years, and a lot of that money has flown into luxury real estate as well. So I think luxury real estate in India has fairly been, consistent in terms of its performance. Demand tends to be more inelastic, and the last 2 years, the kind of wealth creation we've seen will only drive up demand for that segment going forward.
Fair enough. Anuj, let me come to you. And from a macro perspective, I'd like your view. If we talk about the global real estate market, somewhere India is still seen as the under-leveraged one. Where do you see the opportunity for the Indian real estate?
If I can just add what Dhruv said on both those points, I think he covered a lot of it. So we're finding, Karishma, on the luxury, exactly what Dhruv has said is that the rich have become more richer. What we used to sell in a month on luxury, and luxury, I'm talking about $1 million plus homes, we are now selling it in a week. The same quantum of that. And then Dhruv is absolutely correct, as whether it is the stock market, whether it is their own wealth, whether it is in cities like Bombay, Karishma, these luxury apartments have now been delivered. So they're ready to go and occupy. So that also really helped the buyers, because they could pay the money today and they were sort of cocooned in small homes with joint family. And they would usually go to CCI or Breach Candy or Wellington Club in Bombay. These clubs were closed during COVID. The buildings that they were residing in didn't have common facilities of a certain quality. And now, on the other hand, they've made money. These buildings have got completed, the newer buildings. They're wanting to now go out and buy. So clearly, a lot of demand on luxury. Luxury, particularly, Karishma, those which are completed with lock and key today. And again, Dhruv said the right thing is on the cities. So the way that we look at ranking the top 5 is MMR, absolutely more than twice the second. The number 2 is Bangalore, number 3 is NCR, Pune, Hyderabad, and then it goes on to the number 10 city. But clearly MMR is very, very dominant with both the volume and the value. Value, definitely everybody can understand because Bombay is pretty expensive for real estate. So in terms of value, it does exceptionally well. The question that you asked me is that what are we looking at the trends and what are 1 or 2 things that we think should come in. So Karishma, I'm quite hopeful that rental housing in India will find its way. Today, if you look at it at a global level, rental housing is owned by a number of private equity, which means these are large buildings, complexes. They are owned by private equity guys or pension funds, and they rent it out. In India, we really don't have that concept of renting it out because the yields, the return on income is so low that it just doesn't make any sense for any investor to buy an apartment and rent it out because you're getting 2-3% return. I think you're going to see is either sponsored by the government or the way that the rentals are growing up and the property prices where they are, that there will be initiatives over the next 2-3 years being taken by private equity. As I said, either they'll be sponsored by government where they allocate land parcels only for rental housing. Because if you look at it, we said it's housing for all 2022. Housing for all didn't mean that you have to actually buy it. Housing for all could also mean rental housing. So, in a way, I was looking forward in this budget that there should have been something on the rental housing. But I do believe, there will be something that will come out at the center level and then picked up by the state levels on rental housing, where large complexes will be built and owned by private equity or investors, which they will rent it out on a regular income basis.
But Anuj, do you think that the whole affordable housing scheme, is it being justified? Is it going on the right track?
Absolutely, Karishma. Absolutely. So on both accounts, from the government, if you look at it, even this year, they have earmarked 48,000 crores more on for affordable housing. And more importantly, the private sector on the PMAY, Pradhan Mantri Awas Yojana, has really picked it up. And they picked it up not because the government was giving fiscal and financial benefits, but because the demand is a lot more in that sector. So it has started to work. All that I feel there is a bit missing there is that there should be some rental housing policy that comes out for affordable housing. And that, to my mind, Karishma, will come out if the government is able to earmark some land parcels to say you can only do affordable housing on this land parcel and it is for rental. Because otherwise, I'm saying is, how do you complete that dream of housing for all? Because not everybody is going to be able to afford a home, but they can rent a home. So you build beautiful buildings, rent it out 20,000, 25,000 rupees a month or 15,000 rupees a month for affordable housing. And there'll be a number of investors, number of private equity who will sponsor to come in and do this development based on the returns.
Right. And that has been a long-standing demand from the industry to the government.
I think the government is also looking at it, Karishma, very seriously because, real estate is a state subject. So the center is also looking at it, what we need to do to propagate it with the states so that ultimately it is up to the state if they have to pick up on the rental housing.
We haven't really addressed the elephant in the room, and I'd like to get Gulam to talk about it. How about unsold inventory? We've talked on the good side of it and rest, but what is the status of unsold inventory, keeping in mind that there were almost 2.5 waves of pandemic, I call it?
We believe that unsold inventory has been blown out of proportion all through when we talk about 4 lakh houses out there to be sold or such kind of a number, please look at it this way. An apartment is out in the market to be sold when a developer launches the project, when he has his permissions, etc. Especially under RERA, he has to be very particularly get all his paperwork done before he, breaks the ground. And the moment he's breaking the ground, he's out there to sell. Please understand that the whole construction cycle is going to take you at least 2 to 3 years minimum. And during that, this will be an inventory. Whatever apartment he brings to the market is an inventory. So you have to look at it at that perspective. If I'm talking about 4.5 lakh apartments at any given point of time, and you're absorbing 2.5 lakh apartment every year, which means that your stock out there on the inventory out there is not worth more than a year and a half or two. Which means that by the time a developer completes his projects, it is all sold out. So which is not really a problem at all. I'm actually worried all through. Whenever we're talking about those number of 400,000 apartments or 500,000 apartments, I would always look at it as a big problem, because and that's exactly is the key. If actually you start going back to the numbers that you had in the good days, real estate, the home sales, etc., then this inventory will be nowhere. And then you will see the price pressure, prices shooting up. So to me, these inventory numbers are actually a concern. We would need developers to start launching more projects. Of course, they're not launching it because many of them are in dire straits or trying to sort their problems out, which happened due to last 5-6 years of continuous real estate troubles, etc. But today, when the things are looking up, we would need that inventory to come up, because next year when you and I will be sitting and discussing on such kind of a panel, would be worried about the prices shooting up. So to me, inventory, you call it a big elephant, I would say it's blown out of proportion. Let's not really over glamorize it and say that the industry is going through a tough patch purely looking at that one number. That number is not representing the health of the whole industry. It's just one small number, and it has to be given only that, a small number. It's not really a cause to worry at all.
Point taken, not the elephant in the room. Last question, I'm going to take it to Dhruv. We are short on time, but definitely the topic is always something that includes a lot to talk about. Dhruv, another key important announcement that was made in budget was on the electric vehicle battery swapping policy. And that is very much related to how the sustainable housing is going to turn out. I'm seeking your opinion on this, that how are we going to look at refurbishing or changing the whole outlook of housing in order to install this battery infrastructure? Because I've lived in Bombay for 4 years, and I don't think there is place to put any kind of these battery chargers there at least.
Look, I think, that's a very important point you made, Karishma. I think, ultimately, look, while there's a lot of talk about, EVs, it's still a very, very small percentage of the overall number of cars sold. But if you project 10 years down, I think, we're going to see the internal combustion engine, start looking like a relic, right? It's going to happen. And as that sort of change happens over the next, 10 years or more, I think you're going to start seeing that infrastructure, starting to get developed. And more developers will start incorporating, this sort of the charging infrastructure, etc. Within the developments. I think the way community housing is designed, with spaces, I think it allows for that infrastructure, to be created, at the design stage. I think it's a matter of time before you're going to start seeing, homes being marketed with EV charging station as a USP, because as the younger generation starts to move more towards buying electric vehicles, that will become an important sales point for them. So you'll be surprised at the savvy and enterprise which developers have. And they will soon incorporate that as a major selling point for their developments. And then once one or two start doing it, it'll become mainstream. That's what my belief is.
Yeah, but there's a small concern on this, Karishma. What Dhruv is talking about is the inventory henceforth, which will have the infrastructure. But how do we ensure that the millions of apartments which are already existing, how do they come on the bandwagon is something which has to be seen. And unfortunately, not much is happening because it's once again a state, as earlier we spoke about, housing is a state subject. So states have to ensure that the housing societies, etc., the condominiums, etc., come on board and start installing these. And unfortunately, because I'm a part of such condominium myself, I know that till last year we're talking about putting up solar capacities, and this year a lot of those incentives are actually gone. So today, if I have to really put up my solar system so that my EVs are also connected to that, then my problem is that suddenly a lot of those duty corrections or the duty incentives are today gone. So there is no incentive from that end. So even if I'm providing the EV chargings, etc., unless my solar or the unconventional, whatever the other energy sources I was to really boost up to are not connecting together, this will still be just one of the aspects. And I'm obviously not, as a condominium, I'm not too keen to invest in putting up the battery charges unless and until I'm getting some supply incentives as well. So this is much larger perspective which has to be taken at all the levels together, and not just for the fresh homes to be launched today.
Right. Anuj, I'm going to get your concluding word on what Ghulam pointed, because I think that's very important. You see, these are, what do I say? These are long-term goals with short-term incentives. Would you agree to that?
Yes and no, Karishma. Because if you look at it commercial on the office side, you know how it picked up is that the office occupier, the lessee, was mandating the developer that I want to go into a platinum rated building. I want to go into a sustainable building. So these were largely multinationals that in their charter had written that we are going to be sort of zero net carbon. And hence we need to take buildings which are gold rated or platinum rated. And that's how sustainability, the developers were forced to build the buildings. It wasn't as much tax incentives. It started with that. But when the occupiers started to demand it, you had to do it. Otherwise, your building was not going to get leased out, because the preference of any of these corporate was to do that. I do feel is, Karishma, once people in Ghulam's society start to ask, once the buyer starts to ask, once the new home buyer says, the millennial is very concerned about sustainability, and they're going to say, I want a sustainable development. I want a building which has got all these sustainability, or even the existing occupiers. That's when it will start to propagate. So Ghulam is right. That's why I said is yes and no. Yes, in a way that it needs a catalyst, which is these tax incentives. But ultimately, Karishma, it has to find its own way from the home buyer. And the home buyer will have to say, and that's when the developer will get mandated to start to build residential in a much more sustainable manner, the way that they're doing today for the offices.
Okay, thank you very much, Anuj. Thank you, gentlemen. It was a pleasure to talk to you. We had Ghulam, we had Dhruv, we had Anuj share their perspective. It was discussing, I'd say, the reality of realty with the best from the field. Thank you very much for joining.